Jeff Santoro. We're going to talk about a couple of growth stocks that participate in a massive multi-trillion dollar industry, over $6 trillion in 2024, and still rapidly growing, that we think are worth buying right now.
I don't know that these are the two top names that come to mind when people think about this industry, but I'm excited about both companies.
Yeah, me too. I'm Jason Hall. That's Jeff Santoro. This is Investing Unscripted. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, you really should check out our link. It's fool.com/unscripted. Go to that link. The Motley Fool is going to give you some of its best stock ideas to buy right now. Okay, Jeff, how about you kick it? Actually, before you kick it off, I want to preface this because we're talking about e-commerce. And if we go back to before the pandemic, e-commerce was a very big interest, right? Because we had seen the success of Amazon, other companies, Mercado Libre in Latin America. And then, of course, during the first year of the pandemic, e-commerce exploded because everybody had to figure out how to do it. And then it seems like it kind of lost its luster a little bit over the past year and a half because so many of the stocks were overbid. Businesses slowed for some of the companies. They brought a lot of customers forward, a lot of business forward, and their businesses haven't really thrived. But it's still a massive industry and there's massive room for growth. I'm going to start it off with this slide from Shopify's blog. 2023, almost $6 trillion in e-commerce sales. This according to eMarketer. Over $6 trillion this year, approaching $7.5, $8 trillion by 2027. Those are gigantic numbers. And while the growth rates may not seem super sexy, that's the global number. And if you're one of the leaders, your ability to take a large share of that can be some really big numbers. And the company you're going to talk about operates in a small part of the world, very developed market, and they've really started to show us.
Yeah, and I'm glad you mentioned the pandemic because I think it's worth remembering heading into the pandemic, a small percentage of overall commerce was online. You would think it was a lot more considering how ubiquitous like Amazon is in our country, just as an example. But it was still a small percentage of overall sales of things that people buy. E-commerce is going to be a big part of how we shop. The company I want to talk about is Coupang, which is a South Korean e-commerce company. And it's worth noting that they are taking a page out of the Amazon playbook and have introduced a lot of the same features and ancillary products that you see with Amazon. They have a streaming video part of their company, and they have a membership program similar to Amazon Prime. So this has been on my watch list as well, Jason, for a while now. And it really moved up my list in late 2022 because the growth rates have always been pretty impressive, but they finally turned a profit for the first time and have stayed profitable and stayed cash generative. And they've just been growing on that ever since. And the last quarter, I thought there were some really interesting statistics that jumped out to me as reasons to be very optimistic about this company. So here's a slide from their investor presentation from the last quarter that shows active customers. So their active customers grew 16% year over year. That actually has been increasing the last couple quarters. It was 16% this quarter. It was slightly below that the quarter before that, slightly below that the quarter before that. So it's been growing pretty steadily. What's more impressive is the next slide, which is their Rocket Wow members. So this is the Amazon Prime-like subscription that people can pay for. So if you see, you can see here, that's growing even more. So this tells us that, yes, it's growing their customer base pretty strongly, but once those customers are in, they're seeing the value in this membership. And we love membership models. It's dependable recurring revenue, but it's also higher margin revenue, right?
And it's sticky too, right? It creates more loyalty. Those members spend more money than the cohort. Even people that are active shoppers that aren't members, they don't spend as much as members of Wow do. It's really powerful. It's well worth the cost, I think, is the key.
You're getting people to spend more money without having to spend money on getting them to spend more money, right? It's not like you're going out and acquiring new customers, right? They're already your customers. So it's good from a whole number of reasons. One more thing I want to show here, and you'll see this with other e-commerce companies too, but every cohort of members that joins Coupang's platform spends more in their first year as the group that joined the previous year. And then that spending just goes up and to the right. So again, this is showing us that as the platform is around more and as more people come to it, they're spending more. So these three slides, I think, do a nice job of summing up the opportunity here. The fact that the company has turned profitable, the fact that the company is generating positive free cash flow, all says to me that this is the right time to consider buying shares of this company and watching it as it rides this continuing secular tailwind for e-commerce writ large.
Let's talk about a company that tried to get into the logistics side of e-commerce. Interest rates skyrocketed, and they quickly realized that instead of tying themselves down with all of that high operating expense, high capital expense business, they were better off to go back and just stay with their asset light, subscription driven business model that was hugely popular. That's Shopify. So again, same story as so many other e-commerce businesses, Jeff. During the pandemic, Shopify, coming into the pandemic, had already been a pretty giant success. Companies needed to figure out how to do commerce on the web, and Shopify provided a great set of tools to build an e-commerce platform, manage your inventory, sell on the internet, track your analytics, follow your data, manage your inventory, all of those things. And then the pandemic happened, and everybody that was thinking about it did it. Everybody that wasn't thinking about it thought about it and realized they had no choice but to do it. And Shopify onboarded a massive amount of customers and grew enormously over a couple of year period. They spent a ton of money to expand, and then they decided, well, we really need to be fully integrated if we're going to truly offer an alternative to the Amazons of the world. And they acquired logistics operators. So now they're going to be operating the warehouses, truck drivers, and having the last mile delivery and all that kind of stuff. I mentioned interest rates going up. The company quickly pivoted away from that when I think the realities of the capital cost to build that business, what they were going to be, they spun that off in less than a year after owning it. And the thing that's interesting, Jeff, you and I both have followed the business before, during, and after the pandemic, and we saw the growth rates really fell off, right? Which a lot of it was just the normalization of having, again, pulled so many customers forward. But what we've seen over the past year is that growth rates have re-accelerated. More customers are coming to Shopify. Its existing customers are beginning to do more and more. And I want to share just a couple of slides from the presentation that highlight a couple of things that indicate how the company has not just pivoted away from doing the logistics side of it and really focused back on its core subscription services, payment processing, all of those other take rate kind of things where they get a portion of revenue, but also the customers that they've begun to serve as well. This is one of the first slides in their presentation. And what's really interesting, if you go back to their presentation back in 2019, 2020, 2021, the slides and the feature was small and medium-sized businesses. That's what they led with because they saw that, and they still do. I don't want to say that they're pivoting away from that because that's far from the truth. They really were focusing on the small to medium-sized businesses, providing them with the tools to scale their e-commerce as part of their regular commerce. But what they've really leaned into in recent presentations is making it clear that they exist for commerce broadly. And if you take a look at all of the different things they do, it begins to make sense. They've built the business with each of these different modules where if you're just a really small business and you need a payments platform and you need to build a website, you can do that. That's fine. But if you also have a physical location and you want to integrate the whole thing in with your point of sale, you can do Shopify point of sale. It's really powerful, all of the tools, all the way up through to being a full enterprise level of customer with multinational brand presence. Another thing that they've done that I think is really powerful, I want to highlight, is headless commerce. This is something that is relatively newer, but the idea is separating the customer-facing front end from the back end of the commerce platform so that brands can roll out the front end more broadly and react quickly to market opportunities. And Hydrogen and Oxygen, the two brand names they've given for the front end and the back end platform. And the key, and I love the name, Jeff, and maybe it's just cheesy me thinking here, but you think hydrogen and oxygen, what? Well, you combine hydrogen and oxygen. You know what that is, Jeff? That's rocket fuel, right? You're going to say hydrogen peroxide. I know what you were going to say.
I was going to say that I majored in music in college. That's what I was going to say.
Fair enough. But it's rocket fuel, and I think that's kind of their little tongue-in-cheek point, is that it does help businesses just absolutely add rocket fuel to their commerce businesses. So the key to me is that we've seen a completely reinvigorated Shopify from the company that started to make that pivot to become fully integrated to one that realized we really need to focus on what we've proven to be really good at, and this is a true differentiator, and stick with that and build on it and make it even better. And that's what they've done. And because of that, I think Shopify is back on the list to me of e-commerce stocks, that massive multi-trillion-dollar market opportunity that are worth buying right now.